right, everybody, welcome to another Pepperstone Learn It Live webinar. Today we'll be talking about US earnings season and, of course, FX trading strategies, two of our favorite topics. My name's Thomas Atkinson from FX Evolution. As always, I'm joined by Tyrone Abella. Tyrone, how have you been since last time?
Yeah, good, thank you. Welcome, everyone. Yeah, look, earnings season is one of those very important events that happen twice a year that you really need to be aware of, especially if you are trading CFDs. And what I like about it is that companies can't hide anymore. Like they can talk up stimulus, they can talk about all the things that make the markets move, but you can't hide behind earnings. Numbers are numbers. So it's a really good way to actually find out what's really going on in the market. So looking forward to getting into tonight and exploring it further.
Absolutely, Ty. So just before we get started with what I think is going to be a very exciting webinar, I'm pumped for this US earnings season. It's going to be a lot of fun. Of course, the information contained in this video or webinar is generic in nature and for educational purposes only. The information will not take into account your personal objectives, financial situation, or needs. And this information is not to be construed as an offer, recommendation, or solicitation to buy, sell, or participate in any particular trading strategy or investment advice. So Tyrone, just a couple of quick housekeeping rules before we get stuck into the rest of the chart analysis, and we will be jumping into the charts and doing some analysis live today just to really discuss, I guess, earnings and some of the similarities, some of the synergies you see in the markets. Quick, big shout out to Pepperstone's Telegram group. Now, Ty will be posting, I'll actually put it back in the room right now. Now, if you're not part of Pepperstone's Telegram group, you really need to be getting in there and getting hold of some of the great information there. It's a massive group now. There's always daily information. And of course, we definitely recommend that you go and pay attention to a lot of that. It's a great, I guess you'd call it like a cheat sheet to the markets, because it really allows us to see like the top things that are happening in the market in bite-sized information. It also allows you to keep up to date with any other Pepperstone information coming out. Plus, on top of that, these webinars as well. If you ever miss them, you won't miss them when you're part of the Telegram group. I'll also put in our Discord group if anyone's interested. We also have one of those, so you can come and join us in that. So what are we going to be covering today? We're going to be having a look at trading the US earnings season, what it means, how the stock market reacts, all of those types of good things. We'll have a look at a few companies as well. Then live chart analysis of the FX majors, key scalping entry points and indicators, some of the ones that we use, and of course our live Q&A with our team at the end. Now, if you have a question throughout this webinar and you want it answered, put it in the chat window. We'll see it and we'll try to answer it as we go along. But of course, we'll have some questions at the end. We'll have a little bit of time there to go through it. So Tyrone, it's earnings season, and that means we need to be aware of when earnings are coming through. Now, you may like this chart because this is quite a very, very cool little, I guess, draw up of earnings season. I particularly like these earnings whispers ones, which you can get for free, just because they show you some of the key bits of information in, I guess you could say, picture form. Like they tell you whether it's before the open, whether it's after the close, an important fact when it comes to earnings. And of course, you know the companies that are going for that week. So we've kicked it off already. It's April the 14th at the time of this recording. April 12th came out. I can tell you this particular company here, Aphria, did not beat expectations. And this one did go down a little bit after that. But realistically, where it all kicks off, Ty, is here. These banks, we've got Wells Fargo, Goldman Sachs, JP Morgan Chase. That's where things get started when it comes to, I guess you would say, earnings season really kicking off. What are your thoughts on the start, and what is lies in store for the next month?
Well, look, the market certainly anticipated that the earnings are going to be good. That's for sure, given that it's basically creating a new all-time high every single day. So I guess I would say that the earnings would want to be in line with what they're expecting. Otherwise, we're going to see a pretty significant sell-off, I think, because the market certainly factored in that the results are going to be at least as expected or better. So look, this little chart that you can bring up every week is just fantastic, because even with the before and after snapshots of when they actually open, it's actually really important. It might not seem significant, but it actually does make a big difference, especially if you're day trading that particular share throughout the day. Like if they're doing their earnings after close and you're actually trading in the US session, it makes a big difference. Like a lot of them run up into the news, and if you're not aware that it's actually it's earning or reporting its earnings, that after the market, you can be in for quite a shock. So it's actually a really, really important calendar to have up during the earnings season, especially if you're trading the CFDs, definitely.
Yeah, so Ty, what happens traditionally during earnings season? Of course, many stocks, as you said, run into earnings and anticipate a good result. The market tends to remain relatively, I mean, when it's really fearful, it's really fearful. But when it's really optimistic, it's really optimistic. It's like there's two extremes of the market, and it's very little of the time in the middle, if that makes some sense. So as Tyrone said, it's time for these companies to put up the good results and to prove to the market that the expectations are warranted. Some will, some won't. And what generally the market does, it actually goes through and you'll see like what's called beats, and then you'll have misses. Now, if the misses collectively start to actually add up to a higher percentage than the beats, what happens to the usual market indices, such as the S&P 500, the most important index out there that you can trade on Pepperstone? This particular one will not react positively if you get lots of misses. If you're starting to dial them up here and you've only got maybe 3 beats, that's not looking so good. So earnings season is fun because there's so many things. It's almost like you're putting together the pieces of the puzzle, and you of course are reading it with your technical analysis skills at the same time. The price action is actually going to show you the way. We also want to understand seasonal returns and possible movements worldwide, which can affect the stock market during this time. And as I've mentioned before, and Tyrone and I have brought this up several times, I bring it up for a reason. We always talk about it. Here's 1928 to 2020. So this is actually the average monthly return throughout all of the stock market, throughout pretty much all of the trading time, for what is, I guess, mostly perceived as kind of the boom into the rest of it. And you'll notice here, April is actually traditionally a good month. Now, why is it pretty good? Because we have, well, usually a weird March and a weird Feb, but we have a run in through earnings season. And then after earnings season ends, or after we get the tail end through that May period, we start to see that phenomenon, which is the sell in May and go away kind of thing. So it's it's a very interesting phenomenon. But look, April's pretty strong. It's already started strong. We'll talk about it soon. But it's phenomenal to just see how statistics can overlay with earnings and your knowledge of the markets. Ty, what do you think about seasonals? Are they a thing?
Oh, seasonals are everything. And although that we've been thrown out in the last year a little bit, obviously because of the pandemic, and it's in an unprecedented time, yeah, we have been thrown out a little bit in that regard. I think that eventually they do come back to where they should be, and that's the average. Now, a lot of you have probably heard the sell in May and go away, but as you could have seen from that previous chart, it's actually September that you need to go away, because that's September is a hell month. Now, what is important? Look, the thing is, you've got your beats and you've got your misses. Now, we're not just talking about US stock here as well. We're talking about the Australian earnings season as well. You can trade CFDs on the Australian markets now with Pepperstone. You've got to remember and just bear in mind that when their earnings are being released, they're also talking about whether they're going to actually keep their dividend payments, which is leading on to the next stream. Now, if they're going and performing ordinary and the results are bad, sometimes it can actually affect the dividends, or whether they're actually even going to pay one in the future, in the coming months. So it's really, really important. It's not just about the numbers. It's also important for the stock itself to actually see if it's going to be a normal status quo, or whether they're going to cut a dividend, or indeed increase the dividend if the earnings are actually really, really good. So it's very, very important to, you don't have to actually know every single fundamental. You really only need to know whether they've actually hit their target or missed their target. And that really tells you everything you need to know about the dividends. You don't have to go delving into every single report, but it's really, really important to know when it's being released, because that's what's going to affect what we're effectively doing, of course, and that's trading.
So we always talk about lead indicators to the stock market sentiment, Ty. Look, volatility index, VIX, it's also open. That's for the S&P 500. It's on the Pepperstone platform. We'll take a look in a minute. Copper price, also on the Pepperstone platform. Important, becoming less so now that we're actually in a full-fledged, what looks like recovery at this stage from the recession that we saw, or of course that pandemic crash last year. And then we've got the US dollar index, which is something that's very interesting right now. And I think this is actually the best time for us to jump into the charts, Ty, talk about some of these and talk about what we're seeing in the market. So let's go over to the US dollar index. And I tell you what, this has been a fascinating thing recently. And I want to talk to everybody about what happened yesterday and the importance of that. So we had that 92 coming under pressure. And what you'll notice is there's a series of lower highs coming into this support. And Tyron, what does that tell us about this market at 92? What are your thoughts here about what's going to happen next for the dollar index based on this, and what that weakness was showing us?
Yeah, it's actually a funny situation because this actually completely capitulated during your US Open live stream last night, as you know. But really, we had forewarning, and look, for anybody who does our webinars all the time, like that we always talk about the weaknesses when we're getting a series of lower highs and equal lows on the bottom. We're seeing basically a pattern of market being forced down and putting a real amount of pressure on the bottom line, which is a support level at around that 92. So although it did rebound every time it touched there and held up pretty strong for quite a while, it was getting the pressure was coming earlier and earlier each time. Every time that market made a lower high, the pressure was coming down harder and faster. So I guess it was inevitably going to break while it was making lower highs. So we really were forewarned that was going to potentially happen, even though it did happen quite aggressively. Generally, what we like to see is a bit of a pullback up into that support level to see it retest from the bottom. It sold off so harsh that it hasn't actually done that yet now, and it may still do it. It's only 25 points off it even as we talk now. But
exactly.
We were warned. Yeah, we were warned. We were already in a downtrend. And the lower highs and lower lows, I mean, you can make an argument for a descending triangle there, but this descending triangle would have broken down, a fair bit earlier than we would have expected, because generally 2/3 of the way is where we would have liked it. That's probably about the halfway mark. So, but that definitely, and this is what we're talking about, price action really tells you everything you need to know about what's going on in the market. And the dollar index, it is a little bit of a leading indicator, to what is happening in the stock market. Not always perfectly correlated, but it's certainly giving us some signs. It's no surprise to see this falling off while the S&P 500, going to the moon.
That's right, Ty. Zizzle asks here, what moving averages are we using? We're using the 20 exponential, 50 exponential, and 200 simple moving average. So we keep it very consistent. We've used these for a long time, and it's because these ones work. If you were to ask Tyron and I which is the best one, we would probably go with the 20. I mean, Tyron, I'll speak for myself. I'll go 20 for life. What are you going to say?
20 for life. No question about it. Yeah, absolutely.
20 for life. Yeah. All right. So that US dollar index, as Tyron says, the S&P 500 and things like the NASDAQ have, of course, been moving up steadily anyway. And this has just put further bullish pressure on those. Now, I just want to go back a little bit. Yes, it's a bit of revisionist history, but we talked about this several times over the last couple of weeks. And we spoke about this inverse head and shoulders appearing on the NASDAQ, that breakout and how significant that was. And if you ever wanted a great example of just to go and see technical analysis in play and understanding, hey, that market dynamic is super important when it breaks past this 13,300 zone, there it is. And what does that do? It leads to, of course, bullish movement throughout the different stocks that are offered in Featherstone's platform. So what have we seen kind of correlate with these things? I would say Apple. Apple's correlated very well. Look at the movement in Apple here. We've got strong movement. And for anyone that, again, looks at things, you've got a little double bottom down here. Look at the closure above. It breaks through all these little resistance zones. As it breaks those, it capitulates or basically coils above them and continues to move on. Where's Apple going now? It's going to that next level, that 135. And it just shows that this is the type of thing you want to do. Now, if you think, and again, this will happen again, this type of stuff happens all the time. The market is optimistic, so therefore it's going to think about running into earnings. What are we going into now? Earnings. 2 weeks ago, not many people were thinking about that. But if the market likes to run into earnings, especially in the tech side, then why wouldn't it have a bit more of a run when we're seeing weakness in the US dollar? We're seeing a volatility index coming down, which we'll look at in a second. It all starts to correlate together, doesn't it, Ty?
It does. And then what also happens is you'll find that as some tech stocks start to report, if they do report well, not necessarily the same type of tech, but in that sector will actually anticipate that they're also going to report well. So you'll actually start seeing tech companies run a little bit earlier than expected, because they're actually they're going on a result of another company in a similar sort of sector that, obviously the results are pretty good, and we expect that's going to continue. It can be certainly a cautionary tale to actually do that, because one company doesn't necessarily rely on another, but it does give it a bit of an indication that the market was strong in that sector. So it can sometimes get it can be a leading indicator. So reporting on some companies can be a leading indicator to other companies in that sector that haven't yet reported. And this is why it's important to have that calendar, so you know any of the stocks that you're looking at when they are reporting, but also when their sister companies are reporting as well, or when their closely correlated companies are as well, because they can give it a little bit of a boost.
Yeah, absolutely correct, Ty. Once you've got one tech company going good, especially if it's a big one, they all start to give a little bit of a boost and they all start to jump along. So look, that's one of the things that you want to think about. And this is just one earnings season. Obviously, there's going to be multitudes of these throughout the year, as you know. So think about things a little bit differently. And if the market is relatively optimistic, still very bullish on the larger timeframes, when you take a look at the index and it's breaking out and it's showing you technical reasons, then maybe you can go into some of the stocks and start day trading them into these opportunities, into these moves. I mean, Tesla's been moving amazingly. I'm sure many of you are aware of that massive boost it got. Why did it get so strong? A lot of it has to do with the first closure above the 700. Look, the 700 is here. Look, the daily just closed above, and all of a sudden it went on a rocket ship, like really moved up. Tyron and I are also big fans of these 20 and 50 moving averages for good reason. Ty, what do you think about the coil that happened here? Look at the coil between the 20 and the 50. Wow.
Yeah, and don't even worry about the inverse head and shoulders that's there. Like, you got a coil on the right shoulder, bang, straight through the neckline, one of the most important necklines of Tesla's recent history at the 700, and off she goes. I mean, damn, like, this pattern's nearly complete in 2 days.
That's fast.
When they go, they go. Yeah, absolutely. So what do we do now? We start looking at other car companies that potentially are looking at that electric hybrid model, haven't reported yet, potentially could report good earnings. Tesla's moving for a reason. You've really got to pay attention to the companies that are in the same sector. When in the stock market world, you definitely have to compare companies in the same sector, especially around earnings season. It's really, really important. But this is a really good example of how technicals play out, even in like a news-driven, event-driven, report-driven period like we are in now.
And it goes much deeper than that. You go and look at things like anything like McDonald's and stuff. Why is McDonald's right at resistance right now? Because it's going into earnings. The market tends to run in, as we said, optimism is the thing. It goes up to the resistance. It sits around here waiting for the earnings. Sometimes it overshoots, and that's actually more of a danger than I've found anything else, Ty. When what was the good one I think that did a while ago that really let me just quickly close that really exemplified it? I think it was Shopify. So Shopify came through and it was like a massive movement there coming into the earnings, and then all of a sudden it went way too high and then of course crashed underneath. Now it doesn't matter which one of the stocks, technically if they start breaking out and keep going up, sometimes it can be that buy the rumor, sell the fact kind of event. Go through your history, look at Apple, look at how it trades around earnings. All these types of little bits of information make a massive difference when it comes to really understanding what the market's doing and how it's going to move into those. Nvidia Corporation, another very popular one, of course, just announced a pretty amazing kind of batch of news events, and you'll see how strong it's gone. It's actually broken through and closed above previous resistance. So this is hyper bullish into earnings. It's only how long ago, Ty? It wasn't very long. This is why stocks are so exciting right now. You've got 25th of March, we were trading at 497. Now this is trading at 622. So 622 it's amazing. This is a lot. This is billions
astronomical move. Yeah, like that's a serious move. Like, you're talking about a very big company. You're not talking about a penny stock.
No.
Like, you're talking about a very, very big company. Like, for them to be seeing big companies like that move so aggressively, it's great to see. And then, the Nasdaq actually exemplifies all of that, doesn't it? Like,
I was just going to say it all started in the Nas. The Nasdaq leads into all of those, just like the S&P 500 leads into the others. I'll actually draw up the S&P 500 here just to show everyone what I call, I guess, the community trend lines, the one we've been talking about in webinars. We'll call it the community trend line, guys. But this one here basically has been coming through with some very strong resistance. And it's really interesting to see where this S&P 500 is leading into earnings, because there's a lot of hype around right now, but take a look at this trend line. It's been very consistent, Ty. And this is something where I guess we would hone in, we would start looking at this index, and you would start to say, okay, if we watch this do something, will that also give us traders as an opportunity potentially for a little bit of a movement down? Yeah, I mean, it's very extended away from the 20 moving average, our favorite one on the daily. You're hitting this trend line, and if things do turn around and we get some kind of rejections off this zone, where is the first stop? Usually it's around the 20. I mean, Ty, what do you think about this extension coming in? I mean, it could, of course, knock the lights out and keep going up, but if we do get a little bit of lightning bolt weakness, what are your thoughts?
I'm looking for that lightning bolt weakness. I mean, yes, could it keep going up? Well, of course it could, but at the moment it's in uncharted territory. We all know this. We're in an earnings season now that, it's going to tell us a lot. I think the next few weeks are going to tell us a lot about where the market really is at. And I'll be certainly watching for that weakness. I'm not inclined to take the longs now. I don't like going into uncharted territory in an earnings season that we're coming out of an unprecedented time. So let's just wait and see. I'm a bit more of a wait and see on the long here. But what I'm certainly doing, what we know for sure, is that if some of these companies start missing their mark, this is going to sell off. There's no question that this will come down if the majority of the reporting starts to get a little bit weaker. And even even in line might not be good enough. Like, we've anticipated better than average results here. So in line, although in a normal situation might be a good result for a company, it may not be enough to maintain this absolute astronomical move that's continued on. So the danger to me is on the way up, not on the way down. I think that's what we've got to be very, very mindful of at a very, very important period.
Yeah, I just wanted to bring that one to everyone's attention. It's a pretty decent line that's gone through for some time now, so we might as well have it there and talk about it. So we talked about how the US dollar index, let's go into some Forex side of things. We talked about how the US dollar index was finding bearishness, so it was moving down. Now, we also talked about how there was, let's call it 2 or 3 lows that have now been broken against and it could pull back. What is the counter trade to that? Well, of course, it's going to be the euro US dollar, one of the most heavily weighted currency to the US dollar. So it's actually a interesting one because it could come back down, hit this level, hit the 20 moving average, which we know on the 4 hours been respected once, twice, 3 times. And this is the type of technical zone that starts to make more sense to the markets. I mean, basically we've got previous resistance, we've got support at this 119 kind of 20 zone, and it's the type of synergy that you expect to occur. If we actually put a resistance over this point up here as well, what you'll notice is this point is another point of resistance that the market could get to. So now that we've closed above, the most logical conclusion is that the market will move to this point, then find some resistance from a technical standpoint. Then if it breaks through, it goes to the next most common area of support or resistance. What might happen before then, though, is it pulls back first, finds buying pressure here, and then moves up. As a trader, you're just basically trying to find the highest statistical chances and the highest things that make sense to you. If you miss the close, though, or the more aggressive entry, then there's always the opportunity of the more conservative role reversal entry. I mean, Ty, do you think these two synergized levels make some sense in the current market?
Oh, 100%. I think it's going to be, it's actually funny because you had your black line drawn there initially, and I thought, oh wow, I've missed that pullback. I actually thought when you had it there, when you had it on the small screen, it looked like the market was there. I thought, oh, have I missed something? But no, that's exactly what we're looking for. That's exactly what I'm looking for, and I thought I had it, but no, that's exactly what we're looking for. Those levels are absolutely technical analysis 101, and that does coincide with the dollar index pullback to that 92 that we were talking about, right? So if the dollar index pulls back to the 92 from below, like we were talking about, we would probably expect that to be a fair amount of resistance at that point, which is going to coincide if the Euro USD pull back to 119.20, and then with a little bit of good fortune, you would see them both play out and test those highs at around that 119.80. So I think the levels are very, very sound, and certainly you'd want to be setting alerts around them because they can provide some pretty good trading opportunities.
Another one, Ty, go over to the pound. The pound is doing a similar kind of thing, but in this case, it's not as strong maybe as the euro. It's actually stuck within two zones. But look, if you're just getting into technical analysis and you're not sure where to draw your support resistance, I mean, this is a clear area for me with the pound US dollar where there's some support sitting around this 136 kind of 80-ish area. I mean, there's definitely support there. It's found it twice now. And if there was continued weakness, let's just say the market was to continue down, any break below this zone, I think, would expose quite a lot of further selling. And there's a bit of noise here on the left, but I tell you what, it would be a serious level of break. So if the pound finds weakness, and let's say the US dollar randomly finds strength or anything like that, then this level here is key, and it's always worthwhile thinking about. But also, if the pound finds strength, gets through these two moving averages, because we go either way here, it doesn't really matter to a trader which way it goes, just follow the direction. If we close above these two moving averages, what happens then is these act as dynamic support on the way back down. So if we get like something like a pull up, close above, movement back down to these moving averages, what becomes more likely the target? The top end of the resistance, this 139. So there's different ways to looking at it, but both are very logical and very sound. It's just finding, tech trading really is finding key statistical levels that you've seen before that work out a certain way for you, and understanding that you need to trade them with a certain level of risk, etc., etc. And that's what you're looking for. You don't have a bias. Your bias is only what the price action is showing us. So I think the pound here, that moving average shows it for me. Ty, what are your thoughts on this?
Yeah, I think probably your key point there was definitely to say that you shouldn't have a bias. You should just only trade price action. Now, yeah, look, like Thomas said, at this point here, if it breaks above those moving averages and goes on and tests the 139, not only have you already got yourself a pretty good trade because it's broken a key level, but then it's setting up another trade because then it's actually playing out a potential double bottom. So, then you're looking for the break of the 139. And if we measure that double bottom to the neckline, I can bet you anything it's going to go to the previous resistance. So, straight into it. So it's really pattern upon pattern upon pattern. But at the same time, if it breaks down below the 136.80 area and comes back and retests it, the short is just as good. And that's the problem. You don't really want to have too much bias, because if you do, you often miss those opportunities because you're so sort of one-dimensional in what you're trying to find, is that you can actually miss a really, really good opportunity on the way down. Like, look at this one here. If it breaks down, it's a very logical zone to get down to that sort of 134, 20, 30 area. And it's exactly the same channel that we've just drawn. As quite often is the case, a channel will repeat its distance. So straight into a really, really long support zone there. Now, if you are so hell-bent on only taking the pound long and you've got your blinkers on, you are only looking for that double bottom, or you're looking for the trade to the 139, you can completely miss a breakdown of that 136.80 level and miss a potential really good short. So that's what you've got to be really open-minded and let price action dictate what you see and how you trade it, of course.
Yeah, there's just so much price action based stuff that you really need to consider. It's like even here on the odd, and I think this exemplifies it, Ty. You've got to wait for closures. You can't just preempt something, and you've got to let the price action tell you what's going on. So you look at this odd US dollar right now, and was it looking like a massive struggle at 76? Absolutely it was. This 75 80 level, wow, that was a huge level of support. No closures underneath on the most important time frame here, and you see how big this was. I mean, this was huge. We had a left shoulder, a head, and a right shoulder. If this had broken through, boy oh boy, was it going to be short town city for the odd dollar. But all of a sudden things have changed in the last week, and we just got a very significant breakout above, because we go back through, we scroll back through, support becomes resistance. We've got a closure above. Take a look at this daily. This will be the first daily that we've got above any of the other points, and potentially through all the moving averages. And this is like a little bit of a coil here, Ty, showing us that because of what the US dollar did, because of the weakness that it's finding, the odd is actually finding quite a lot of strength. And there's even a little tell here, isn't there, with these series of wicks, but all the wicks being rejected, showing that there is some buying pressure that's occurring here. Lots of stop hunting, but lots of buying pressure. Each time it came down here, bam, straight back up, straight back up, straight back up. This daily close means a lot, and I think it's a very interesting thing to be looking at on the odd US dollar right now as well. Just technically, a break close is a big deal.
Yeah, it will be very interesting to see where this candle actually closes at the end of this daily period, because if it can manage to hold up above there, yeah, all of a sudden it does look pretty strong, doesn't it?
Yeah, I think it looks a lot better than it certainly did. But it's again the market dynamics between understanding that we might have had a bearish sentiment on it last week, fair enough. But all of a sudden you're bringing that bearish sentiment back and you're saying, well, what am I seeing now in the markets? Things have changed.
Yeah, I tell you what, I had a bearish sentiment on this one yesterday afternoon, because there was actually a descending triangle on the 4 hour. So much so I did the Tuesday Market Watch video on it. Now, it never got an entry because the support line was never broken at the bottom of the triangle. But yesterday afternoon, that was the head and shoulders on the daily with a descending triangle on a 4 hour trying to break the neckline. Now, it didn't break the neckline, so as you can see, it went up. But all of a sudden, we're looking for longs, and I think that's the whole point. Like, you've got to be so dynamic in the market, and listen to the price action that 24 hours ago we were hell bent short on this, and now it's looking extraordinarily strong, especially if that daily closes above all those moving averages. So very, very big one to watch.
And that brings back close is the key, Ty. Like, we can have a direction, but guess what? You don't get the close in the right area. Hey, we've got to reverse that, and we've got to go, where is the close? Where is the close? The fight between 100%. The Bulls and the Bears only ends at the close.
Yeah, that's right. I'll look out. If that daily candle comes down and closes below the 20 by the close of that, look out. Yeah.
You imagine if it's like let me just draw it for everybody here. Oh, wow. Can you imagine that? Boy.
That is a gravestone doji for people who don't know what that is.
That's what it would be. Yeah.
Yeah, that is a very, very ugly candle, and that would be very ugly for the Aussie US dollar. But that's why it's so important. Always wait for the closes, especially around earnings season, because remember what we saw in the earlier slides. Companies report before and after the market. Okay, so it could be looking all rosy up until 4 p.m. New York, but then by 4:30, half a dozen companies have reported. If those reports aren't in line or worse, the futures are going to fall and take a dramatic fall. And the daily candles don't close on New York close; they close a little bit later. So it's very, very important not to go to bed at midnight thinking, oh yeah, it's all green, all good, or all blue, all good in this case.
That's right, Ty. You've got a lot of different things occurring here. I mean, you've even got this New Zealand US dollar that showed even more weakness. That's now pulling back to a point of roll reversal, Ty. Previous support now acting as potential resistance. This is where we start to break down the concept of, I guess, lightning bolts and what we talk about a lot, which is change of trend on a smaller time frame. Is this enough for you to identify a support and then a resistance zone? A lot of people think yes, but actually trading is very complex, and many people find that it is harder than they originally thought. Taking the complexity out of the markets is actually what we teach over in our masterclass on FX Evolution, Ty. But it's all about trying to say, okay, can we have a step-by-step process that we can follow, where every time we actually look at this support and this resistance, we say, not enough, we need more information. I mean, Tyron, I know you made one, but the point of the matter is that it takes more than just saying, hey, that's a great level, doesn't it?
100%. It is a step-by-step process, and you've got to explore and you've got to do things in the right order. I think it's really, really important. So you look at the bigger time frames, then you work your way down. Look, it's like this. If you are baking a cake, okay, you're going to have maybe 5 or 6 different ingredients to actually make that cake happen. If you've got a recipe to follow and you're checking every part of it and doing it in the right order, that cake is going to be quite a nice cake. But if you start, putting icing on it before the cake's even gone into the oven, you're going to actually end up with a botched up, basically cake, right? Trading's the same. So if you're taking a trade, just entering on that roll reversal, as a perfect example, if you're entering on that roll reversal right now, and not checking, the dollar index, the VIX, the bigger time frames, what's going on everything else, you're effectively putting ice on your cake before you've put it in the oven, because you're not really, it's half baked.
Did you just love it? You said love it. No joke.
But all jokes aside, it's actually 100% true. You've got to do everything in the right order. Make sure you tick off every single box when you are placing a trade, because sometimes it's something that you could miss completely on a bigger time frame, or something that you should be normally checking that you don't, that will get you in trouble. And there's nothing worse than making a mistake like that when you're trading, when you know that you could have missed it if you could have missed that mistake if you did everything the right way. So it's really, really important.
So some of the things that you can look for at these situations are things like lightning bolts towards the downside. In our course, we talk more about this. It's to do with reading peaks and troughs and being able to really predict, I guess, more efficiently what trend is really telling you. Things like double top patterns here on the smaller time frame, things like coiling patterns where the market kind of sits there, starts to coil, and then breaks towards the downside. You're looking for that last piece or last couple of pieces to the puzzle and bringing those together. So yeah, New Zealand US dollar, I just think it's a good educational experience on saying, okay, yeah, the zone makes a lot of sense, but the story leading up to it is not usually the story with the direct drop. It's more of it's hit the level, we have to wait for the final piece. And when you do that, you actually become what I think is probably more a uniform trader. I mean, if you're just kind of like whacking it in,
100%.
That's probably when you get into a little bit of trouble, and then the revenge trades begin.
You've got to be more rounded as a trader. Absolutely.
I know we said Forex only tonight, but why not just bring up some gold? Just because gold's very tethered towards the dollar index as well. And I think it's an interesting one because gold's been, I guess, forgotten in the light of things like cryptocurrency, like Bitcoin and stuff being more popular at this stage. Gold has been forgotten, and it's at a very interesting zone in the market. It's again a great lesson in technical analysis, lesson in double bottom patterns, and when the market looks very different to maybe the theory and how you can interpret it. So here we've got two lows, and I think we'd all agree that it found support down here. It doesn't take any kind of rocket scientist to look at this and say, okay, well, yeah, we had support over here, we had resistance, it's found it, that's a key zone. Now, we do have previous support, again, role reversal area right here. And the double bottom is, for many people, in play. And technically it might, you could say, oh yes, it's in play technically. The problem is where the in play begins, which is like here, that's right into a very critical role reversal. Is that we need a little bit more information here again, don't we, Ty?
Yeah, most definitely. It's one of those ones where, you need that evidence to, look, you may not get the absolute best entry when you're waiting for evidence, but you're certainly going to get momentum on your side, and that's far more important. So, you might think to yourself, you want to anticipate this move and maybe trade it, but realistically, if you get that momentum on your side, it's going to you're going to get more wins out of it than losses when you are actually waiting for that momentum, because momentum is more important than trying to get the absolute perfect entry. You need price action to tell you what it's going to do, or give you a far better idea of what it's going to do, rather than just hope. We want to take the word hope out of all trading, right? That's the main thing.
No hope, only technical analysis and well thought out decision making. Hopefully, we'll get rid of hope. We'll go with follow a business style type of trading strategy. That's the way we want to do it. Let's get back into the slides quickly. Let's just go through some theory here. Of course, times to trade for part-time traders. If you're somebody that's trading the stock market, now a lot of people will say, oh, I trade the first hour of the stock market. Well, that's cool, and there's also a lot of excitement around the pre-market open, and of course you'll see a lot of movement. But just remember that a lot of the big trade is actually done usually in the last hour, where the funds say, okay, we need to get the extra allotment for the day, we need to meet these guidelines, we need to do this rotation. Okay, we've seen enough information. It just makes sense that most people that actually trade generally near the close rather than the open. So if you're aware of that, there can be times of the day where sometimes the market will start really hot and then it will drop off throughout the day, give you an opportunity to get in being a scalper or a day trader, and then actually pick up near the end. So Ty, in knowing who's trading the market at what point of the day is very important, isn't it?
Yeah, most definitely. And it really makes a big difference, especially not just in stocks, but also in currency, knowing which times of day to trade, basically if you're scalping or even swing trading for your entries. Like even if you're trying to get in a longer term position, there's no point entering at a really bad time of day that notoriously is very slow and very weak. Yeah, it's not as important for the very longer term trades, but if you're day trading especially, you need to know all of the nuances about what happens at the start, beginning of the market movement, what's happening in the middle, and of course, what's happening at the end. It does make a very, very big difference. It just adds more strings to your bow. It's a little bit like that step-by-step process that we're talking about. Before you place a trade, make sure it's the right time to place that trade. It sounds very straightforward when we talk about it, but it's amazing how many people miss it.
Not that simple when you get into it. So of course we said we talk about some indicators. Look, indicators that work quite well in the stock market. RSI, MACD, of course, is a great one. Stochastic is good if you're on the smaller time frames and you're looking for like range bound kind of concepts. Learning channel breakout strategies, learning double bottoms, learning double tops, learning moving average, and following trends using dynamic support and resistance. We've covered this before in the webinars. Go back through the Pepperstone YouTube, go join it, get in there, get into the Pepperstone YouTube archives, I guess I'd call them, Ty, and watch some of those. And you can actually also go in the Telegram group, scroll up through, and you'll see a lot of them. So it's it's an excellent thing to do, and understanding all of how they all work together is some good strategies there. Times to trade for part-time swing traders, of course, you want to be really, if you want to do scalping and day trading, you need to be aware that you're always going to have to put more time into the charts. The facts are that you're going to need to put 2 to 3 hours in most days of the week. Let's call it Tuesday, Wednesday, Thursday, Friday, something like that. Now, if you're a swing-based trader, you can actually check the charts a lot less, set alerts, and only do about 30 minutes to 1 hour of analysis. So while we created a course that does all of it, it just depends on how much time do you have realistically, and I mean realistically, to be dedicated for a longer period. It isn't for, not everyone can hang around and do 3 hours every day consistently for multiple years. I know some of you out there are addicted to the candlesticks, but not all of us. Like I tried doing it, Ty. We used to do 10 hours a day. It's tough, yeah. Being able to stay in the game is about being able to stay in the game.
Most definitely. And look, here's the thing, right? Most people turn to trading as an alternative so they can actually have a better quality of life and a better lifestyle. So if you're going to spend 10 hours or 12 hours in front of the charts, is that better than a 9-to-5 job? I'm not so sure. And I'm pretty sure your eyes aren't going to be very happy about it. So you've got to make sure that the what you're actually getting out of trading is actually what you wanted to achieve in the first place. Because I can tell you, you wouldn't want to be spending 10 or 12 hours in front of the charts. You're not going to come out of it feeling pretty good about yourself at the end of it most days. I can tell you that.
No, exactly, Ty. And furthermore, like if you're just doing that, it's just it actually ruins your psychology, and psychology is the most important thing.
Take it from people who did it for a long time. It's not good. You don't want to do it. It's something you want to avoid. And it took us a while to work that out, but we did. That was many years ago now, but we did. We thought the more time we spent, the better we'll be. It's actually worse. It's worse.
More time in doesn't mean necessarily more success out. All right, well, we'll quickly just scroll through here. Ask your questions as well for the Q&A right now if you've got any. I just want to quickly talk about peaks and troughs. Obviously, following trends and understanding peaks and troughs, very important. Channeling markets, this is just a quick slide that we use all the time. Double bottoms, double tops, all important. These are some of the best patterns. There's some patterns there that are well worthwhile. Roll reversal, roll reversal, roll reversal, one of the most important. This, which I'm just putting on, I'll take this away soon, but it's not time just yet. Hyperactive markets. I've used this almost consistently for a year. I know you guys are like sick of the slide, man, but it's just so important. I just love it so much, so I put it here. And understand also different types of trading styles. So one of those is with roll reversal, how many times was the resistance hit? And then if it closes through and comes back down, if that was hit 4 or 5 or 6 or 7 or 8, 9, 10 times, the more times it's touched, when it breaks, especially if it breaks like this one was, which was a series of higher lows, it's going to be a very strong level of buying pressure when it breaks and comes back down. I can tell you, I remember that one, so it did. Just stuff like that, just thinking about it a little bit differently and nuance it is super important. Yeah, well, I mean, look, these are all very similar things that we've covered over the weeks. I will go over to questions here, Ty, and I have a question from Peter. It says, hi, Tom and Ty. Glad to have Ty back. Cool. Kindly share thoughts on the debate going on regards to the impending inflation in the US due to the stimulus package. Will the Fed increase interest rates to stem inflation? They'll do it if they have to, but at this stage, they don't want to do that. And I think it's become pretty clear that they want to leave it as low as they can for some time. Look, they'll do whatever it takes. I mean, Powell always says the same thing. I'll use all the tools in my arsenal to do whatever I can to save the economy. And I think they're going to manage it as best they can. And if it gets out of control, of course, then that will happen. But look to Japan and the way they've been using monetary policy even more a longer period of time than the US. And I actually look there for a lot of key metrics to what might happen in the future. I mean, QE is not a new thing anymore, is it, Ty? And Japan's been doing it for a lot longer than the US have.
No, and I think the just to answer that question as well, Peter, I think the government and the Fed have got an idea in their head of where they would like the market to keep it at a comfortable level. An out of control market that's going up doesn't help anybody really, except people who are just going long. It's not sustainable long term. So I think what they will do is they'll let it reach a level where they think a pullback now will probably get it to the level where they want it to actually be, and then they can start using their tools. So I don't think they're going to interfere just yet, but they've certainly got it up their sleeve. And believe me, when they pull the trigger, you will see the market come down to the level that they want it to be. Maybe it might overshoot, depending on how aggressive they are, but they will get the market. It's almost it's not a word we like to use, but it's almost market manipulation, and to the extent that they can manipulate the market down if they want to. Yes. And they will use that tool if they have to, but they've got a number in their mind. Now that might be somewhere between 3,500 and 4,000 on the S&P, but what they might let it do is maybe get to 4,500 before they pull the trigger, knowing full well that it's going to sell off 500 or 600 points probably in a couple of weeks. But then they've got exactly what they wanted, because that's where they wanted it to be in the first place. So we can't really know for sure what they're thinking and what they want, but when they want to pull the trigger and they think they need to, they will, and they will get the effect that they want.
All right, we've got a question coming in here from Arne as well. Sorry if I mispronounced your name. You talk a lot about the close. Do you mean the close of the candle or the close of the trading day? Close of the period. So close of the candle and the time frame that you're looking on. If you're a scalper on a 1 or 5 minute chart, the close there is just as important. Well, not just as important, but it's very important to that time frame and what you're looking at, just like a daily would be. Of course, the higher the time frame close, the more significant it is, because more eyes are on it and more chance of big traders being around. Look, I just want to quickly talk about this, Ty, just very quickly. We mentioned before, and I had a question about it anyway, which was about our technical analysis masterclass. If anyone's interested in doing it, we have a 38% off special at the moment for it. It also includes some private Discord access to our trading rooms. So if you're interested in that, I put the link in there, and I'll also pop back in the link for Pepperstone's Telegram group. Remember, if you're not in that one, that's a free group. Get into that and yeah, join up all these rooms and get involved in the community, because we've got one of the best communities between the Pepperstone FX Evolution, I think, on the internet. It's just amazing stuff. Here's a question coming in from Mohan as well. Can we set for stop loss and give up the trade? How many percentage points? Okay, I think you're probably saying, can we set up a stop loss and then maybe set it as a percentage? You can actually use the Pepperstone advanced trading tools. So if you're not aware of these and you have a funded account, you can actually contact your manager or the person that looks after your account at Pepperstone. And these tools here in MetaTrader 5 can be excellent. So these allow you to do a whole bunch of different entering and exit kind of strategies. In particular, the mini terminal is one of our favorites, isn't it, Ty?
Yeah, most definitely. It does do a lot of that, and they're actually getting more advanced. One thing you do have to be mindful of, though, if you are using the smart tools, I actually noticed this the other day, since the changeover to the .A, you must update your trade terminal platform, or it'll say it's not actually trading, not placing trades for you. So you've got to make sure that you're actually using the .a, because I think the existing currencies are still in there. So you just need to remove them and yeah, make sure the terminal has a .a and it'll work for you. But they are very, very good. So very, very important. We've got another couple of questions here as well, asking about particular pairs. We're doing that in the next webinar, which is starting in about 10 minutes. I'll actually post that link in the room as well. If you're interested in looking at the currency pairs and doing a live analysis on that, that'll be happening in about 10 minutes, and that link is in the room as well.
Awesome. All right, guys. Well, look, thank you so much for attending today. Hopefully you got something out of it. Of course, US earnings season is always an exciting time. I think the markets are just getting started in terms of really good trading. I mean, last year was, some people would say it was good trading, but I think it was more very hectic. And what you'll find is that trading really begins when markets settle down. That's when trading begins, and yes, before correct. That is wild, the wild west of the markets.
It is the wild west. Yeah. So very important, guys. Just after this webinar ends, there's going to be a quick survey that Pepperstone put out to make sure that everybody is getting what they want out of these webinars, and of course to ask for any inputs from you, the people, because we're doing this for you to make it as good as it can possibly be for Absolutely. The traders out there. So please take a couple of seconds to fill out the survey so we can get some insight as to how we can make these better and bring in the most out of what we know to you on a fortnightly basis.
Okay, thanks so much, everybody. We'll see you soon. And otherwise, we'll see you in about 2 weeks' time. Bye for now.
Thanks, everyone.